All right, the S&P 500, the Nasdaq 100, these are the main conversations here on the channel. But today and throughout this week, we have a few things we needed to talk about in three specific subjects. Now, when we look at these three subjects, I'm going to tell you right now, we have our CPI and PPI, I believe, Wednesday and Thursday. Then you have your QQQ 370 test. This already did happen, but I want to talk about why this is so important and the significance of this level. And then, of course, you have earnings kind of beginning at the end of the week, and then also oil having a possible breakout in a direction. And if you know anything about oil, it's obviously been one of the leading influences on our inflation data. Now, we're going to be looking at the charts on NQ a lot here, so give me a second. But the first thing I want to talk about is what's happening with oil and the markets in particular there. Now, again, PPI, CPI, very, very important. But starting with oil, I want to get this out of the way because obviously there's a direct correlation between oil and inflation and energy prices. When we saw inflation peak out, we saw oil prices also peak out. When oil prices started dropping rapidly, we saw inflation, CPI, PPI start to drop rapidly. Now, it hasn't really correlated with core inflation, so we need to pay a lot of attention to that. But let's look at the chart really quick. Okay, so a few things are really clear. This is the daily chart, just to let you know. So you can see back here in June last year, we peaked out and then just dropped all the way into basically now. Now this green line right here represents the weekly 200 SMA, and you've been above this since essentially January 2021, in which your bullish trend really confirmed and pushed you into new highs. So what you're seeing here, in my opinion, looks almost identical to the opposite of what happened back here. So you came to this massive level around 66, 67. You hit it like a brick wall. You eventually broke into it into the summer of 2021. You mounted that level into the end of the year. And then obviously in 2022, you went crazy. Now, what's happening here is, in my opinion, very similar type of structure. Now, I'm not going to say it's confirmed that you're going to break down here or anything along those lines, because the energy markets are absolutely crazy. And there's a lot of determining factors that will impact energy going forward. So we look at oil and you can see that you're pushing down this massive level of 73, 74. You held for so long, you broke below, got back above, trapped some buyers in here, and you're kind of just hitting a brick wall as of right now. So that's where I'm at, and that's kind of how I'm reacting to this overall level. I want to see what happens here. But we also need to identify you're in a downtrend, and it's a clear descending triangle into the 200 SMA on the weekly. So we also need to know here, when you look at the 200 SMA, I mean, look at how long you kind of held this before. We go back to 2019. I mean, it was a brick wall. Once you broke below this into COVID, it was, all downhill. But these are things we need to be kind of concerned and worried about when it comes to oil, what's happening here. Now, more with oil and things to be concerned or worried about. Obviously, what's happening with the SODs and everything there, it's completely unpredictable. And we've seen oil refineries kind of slow down production even here in the United States. So there's a lot of indecision going on specifically with the oil markets. Now, also going forward, and I'm not going to say that there's going to be a peace negotiation established with Ukraine and Russia. I think trying to predict that is just craziness. But if something does get established there, I also think oil prices could take a massive hit. The idea of people repurchasing or opening trade back with Russia, need to understand it will definitely hit the price of oil, and we'll see oil probably drop once again. Also taking into account, the U.S. needs to refill its strategic SPR reserves, and they haven't really done that yet, so they're kind of waiting and hoping this drops again. So as I look at the chart, I have this assumption that I do think energy will continue to drop. I'm not betting on it, but if that does happen, you have to assume inflation data looks really good, and the market has reacted very well to cheaper energy prices, specifically when it comes to supply chain in the market. Now, when it comes to this week, we do have core CPI, like I mentioned, it's going to be Wednesday, and then I believe Thursday, as you come down into this as well, you're going to see PPI, and then I believe on Friday, what do we have? We have Michigan consumer expectations and inflation expectations, which also give a little bit of, adjustment on the market. You have some Fed speakers here speaking as well. Now, the biggest things coming from this, in my opinion, is going to be what's happened from PC. We saw core PC actually drop just a little bit. But again, if we continue to see this react and seeing core inflation just dropping at all, it puts, a coin flip in the air for what's going to happen with raising rates at the next meeting. Because if there's evidence that core inflation is dropping, it definitely puts a little bit of doubt in the Fed's head about, raising again. You always want to keep the extra ammunition in your pocket for a rainy day, if something takes a turn for the worse, etc. We also need to understand the Fed has said we are now in restrictive territory. We need to be paying close attention to what the Fed says at every single meeting. Now, they said they still want to raise the rates, or still could see up to 2 rate hikes by the end of the year, mainly 0.25. But I want to say right now, it's important that we identify the words and verbiage you're using. They're clearly saying we already are in restricted territory. but we still could see that in the future. So it's definitely, you're playing games with the Fed here. You don't want to seem too risky and getting too permeable, but it's important that we identify what's happening. I also think the markets are pricing in. I think right now they're pricing like an 85% chance of a hike. So again, good data seems to have a bigger impact on us in the short term than potentially flat data. I don't think we're going to have a bad CPI or PPI reading. I mean, if we do, I think we'll probably get a significant little bit of a drop if it comes out very bad. But it's worth mentioning, flat to good data, I still think can move us up in the short term. Just don't get bad data. Now, QQQ, probably the moment we've all been waiting for. Just giving you this really quick. It's basically 370. But I want to show you the significance of this level. This is the weekly time frame here, and just look at how this level has been respected. I mean, brick wall, we sat here for 4 weeks, got rejected, finally broke above, got stuck below it again. Then once you broke above, it took off, right? 1, 2. This was like the line in the sand when we dropped down, if you do remember, back last January and last March. Double top, got obliterated, right? And that's where we're at now. But it's important to realize how long we've been sitting here and how long we've kind of been reacting to this level. It's kind of crazy if you think about it. It's almost been 4 weeks now, right? And we're making an ascending triangle at this level. So again, I want to keep a level head. And I did tell Discord members a little bit of something today, but let's just identify a few things here first. Clearly making an ascending triangle at this level, very clear. You are getting rejected. You can't hold it on the daily time frame. You can go to the daily to see a little bit more clearly. You can see you're not holding on the daily there. But again, nonetheless, higher lows still being established. So what I want to say for this week in particular, I want to see if we're going to continue making these higher lows, but it's important that we're making these higher lows right now while data is incoming. So it could definitely give us a little spark to bounce off these supports. But also going into this is we need to kind of relax a little bit. Something I was talking about in Discord is even if we get a pullback, or let's say hypothetically we pull back to 355 on Qs, or a $10 pullback, or even deeper. All things considered, we've had a monster run. So running continually into all-time highs would probably be like the best run that we've ever had in the history of the Nasdaq. So am I counting on that? Not necessarily, but I do want to say it would be natural to get a little bit of a pullback here. That being said, from a technical standpoint, you're still making higher lows and you're consolidating at highs. It's almost like you want to continue. On top of that, we do have earnings coming up right now, specifically with bank names this coming week, and then some oil. And then obviously next week, we start to have Tesla, Netflix, and a few of the others. And then the week after that, we have Meta. So we have a lot of those tech names coming into play here. And it's almost like, from the previous videos you guys have seen, if we start to break these levels, there's in my opinion, like a 90 or a high percent chance we do break into all-time highs. So it's like it's kind of brewing the perfect storm here. We also have to identify we're coming into the end of an election term as well with Biden. They need markets to look as good as possible going into this next election because in their opinion, they have the big bad Trump coming to run against them. So it's almost like things are aligning for another push up, but I don't want to bet all my money on that. Again, I have some long still in the pipeline. I have some AMD, I have Google, I have some Meta. That's where a bulk of my money is right now. But again, you don't want to over leverage. And when you get to push up, I'm trimming positions gradually just in case we do get a crazy drop or some bad news does come out there. So again, it's important that we're not fully leveraging, fully YOLOing into the market right now.